Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is February 18th, 2025. And today on our call, we have back the CEO, Peter Londa from Tantalus Systems Holdings. Tantalus trades on the Toronto Stock Exchange under the symbol GRID or GRID, and it also trades on the OTC under TNTLF. The company is currently trading at $1.85 with 51 million shares outstanding, or about a $94 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. Peter, great to have you back. It's been a little while since we last spoke, so happy to have you here to give us an update. Looking forward to that. We've got a number of new sort of listeners, so why don't we give everybody an understanding of what Tantalus is all about, and then we can get into some of the updates.
Absolutely. So Paul and Trevor, thanks for having us on again. It's a pleasure and privilege to be here. And for those listening or watching the recording, thanks for allocating some time to learn a little bit more about Tantalus Systems. As referenced, we're publicly traded on the Toronto Stock Exchange. And at the highest level, I'm going to jump around a little bit from our investor deck, but to give everyone some perspective on what we do, we are a technology company that is focused on helping electric utilities modernize the distribution grid. And when you think about electricity and the utility industry, there's generation, there's transmission, and then there's distribution, which is really the delivery of electrons, power to charge our iPhones, TVs, and computers, other devices that we use. Tantalus is focused on automating and modernizing the delivery of electricity, the distribution grid. And the way in which we do that is a combination of hardware devices that are intelligent that we build. Embedded on those devices is software, much like your iPhone. You buy an iPhone and then you'll load the apps on it. Right? There's embedded software on that device to make it work. And then that device that we build with embedded software and intelligence is deployed in the field. And as those devices are deployed in the field by a utility, we're collecting data. We then use that data to understand what's happening, understand changes that are unfolding across the grid, and most importantly, help utilities predict and improve their visibility as to what's actually unfolding. And so to that end, today we support over 310 utilities. We're going to share information today that ties to our Q3 2024 filings. We have not yet released our 2024 year-end results, but we'll be doing that forthcoming in March, and look forward to providing everyone with those updates. But through September 30th, our Q3, over 310 electric utilities as customers. That's more than 10% of the number of utilities in the United States. So we continue to gain market share despite being a relatively smaller company in this space. From a financial profile perspective, we like to reflect trailing 12 months. We think that that's a good barometer. Utilities tend to buy based on their budgeting cycles, and things can get a little lumpy quarter to quarter. But on a trailing 12-month basis through September 30th, we achieved almost a record result for us at $42 million US. Remind everybody, we report USD. That's where our revenue comes from. A lot of our expenses are in Canadian dollar, as we're headquartered up in Burnaby. And so in conjunction with that, we've been making the migration back to positive adjusted EBITDA relative to a significant R&D spend. About 35% of total revenues from software and services today, or as of September 30th. And as of September 30th, over $12 million US in annual recurring revenue, and that number is growing at about 20% per year. So a couple of highlights since our last conversation. We've spent a significant amount of time focused on an R&D project. I'll show 2 slides and then I'll take a pause, Paul, for questions. But the history of our company has really been centered around the utilities historic perspective within the distribution grid, which starts at the substation. Some of you may recognize these in your neighborhoods, typically surrounded by chain link fence with security. And then from the substation, electric wires that run over the streets in most communities in Canada and the United States, sometimes buried, but more often not in the air, to utility poles, and from utility poles, transformers. They look like big beer cans hanging up in the sky, and then from those transformers down to our house, the meter. That's really the way the utilities mindset has been over the last 100 years, and certainly our focus of attention over the last 30 years of Tantalus's existence. Over the past several years, utilities mindset has changed, and in conjunction with that, they are very much focused on what is the impact of an electric vehicle on a pole top transformer? What's the impact of higher winds and extreme weather events at various sections of their grid? What's the impact of smarter appliances inside our home? Rooftop solar, storage, electric smart water heating. And so as the utilities trying to figure out what's happening behind the meter, we partnered with 9 utilities that we refer to as an advisory committee to build the TRUSense Gateway. This device, and more than happy to dive into further detail, but we have successfully designed, developed, and now delivered the TRUSense Gateway into the field. We have invested $15 million over the last 3 years to bring this product into the market. We firmly believe we have a first mover advantage in our market segment to help utilities really understand not only what's happening at the meter, but more importantly, what's happening behind the meter, and from understanding control. And so there are a lot of great things that this device does in terms of enhancing the modernization of the distribution grid. And to that end, just to give everybody what that means economically, the 9 members of our advisory committee that have been working alongside our engineers for the last 3 years represent, in full deployment, about an incremental $150 million of revenue potential for our organization over the next 7 to 10 years. And our sales organization and marketing teams have been pretty successful in also beginning to present the TRUSense Gateway into our market now that we are through commercialization and into production. And we have about another 35 to 40 utilities that we are actively involved in from a sales perspective that represent almost $350 million. So in the aggregate, we believe the TRUSense Gateway, now that it is fully operational in production and now being delivered, almost $500 million of opportunity to help drive the growth of this business over the next decade. So we think we're in a good spot, pretty compelling opportunity, and one that we are currently executing on. That's sort of an update from our last discussions, Paul and Trevor, and I'll take a pause and see where we'd like to go from there.
Perfect. Thanks a lot, Peter. Reminder of everybody that's listening, please, if you want some questions answered, just feel free to use the chat function and I'll make sure that Peter gets the questions. Peter, maybe talk a little bit about some of the products. I noticed when I checked sort of the press releases the last little while, you've got a lot of certifications or new certifications on a number of products. Maybe give us an idea what that means for you, and how do you monetize going forward now based on some of the milestones that you've hit?
Yeah, so I'll take a step back within our deck. Sorry, jumping around a little bit. You can see the slide numbers are. I'm just sort of trying to give highlights here. So let me actually even take a step further back. So to your question, over years of history for Tantalus, we started really entering the utility market focused on helping utilities connect to meters and connect to other devices deployed through the distribution grid. So we've grown up in space that sometimes is referred to as smart metering. And to that extent, the $42 million USD of revenue on a trailing 12-month basis that we've delivered all ties to the left side of this page. And so within the disaggregation of our products, to your question, Paul, we sell something called TRUConnect. If everyone looks at the camera, that's what a TRUConnect device looks like. This is an edge computer that is much like your iPhone. This is our intellectual property. We have it developed and produced by a third-party contract manufacturer. So our CapEx in terms of our model and balance sheet is pretty light. And then this device gets deployed in circumstances, the one I'm holding up, under the glass of a meter, turning that meter into a very intelligent, responsive digital device. That same PCB, that same green circuit board that I just held up in my hand, it gets deployed in other types of devices and sensors as well, up the line from the meter to the substation. And so we have something called TruGrid Automation, which is a collection of applications, software, and data analytics to help utilities take data from a meter, take data from a distribution automation device, and through that data, right, using machine learning, understand what state changes are unfolding. So I like to use the example, we can pick up granular data that is indicative of when a tree is hitting a power line because of high winds, or when a squirrel is chipping away at a power line and ultimately can break through the insulation of that power line. Unfortunately, squirrel gets electrocuted, but that can trigger a power outage, right? And cascade down the line through circuits and feeders and knock out power for homes and businesses. We've seen that unfold in British Columbia. One squirrel blamed for power outage to 9,000 homes. So we're able to pick up granular data to help utilities pinpoint what's unfolding on the wires, at the transformer level, at the meter level. And so that's the TRUConnect solution and TruGrid. We've acquired a company a few years ago, which we now refer to as our TRUSync Grid Data Management software application. This is as folks have tracked us over the years or look at our financials, an acquisition we made soon after going public of a company called Congruitive out of California. You can think of it like middleware for those that are familiar with enterprise software capabilities. It is almost like an operating system that would be on your computer, like Windows operating system, to help bring data from a variety of different devices in a very secure manner and share that data across multiple systems at the same time. So that's a third sort of product capability or solution. On the right-hand side, we've been doing things with utilities for some time around what's called demand management or demand response. Turning on and turning off air conditioners is an example in crisis or times of emergency or trying to shift peak load. That's another capability that we have. The TRUSense Gateway is a physical device. This is the latest and greatest. And to your question, Paul, as we think about some certifications, I'll just jump forward. So since our last conversation here, we have 3 versions of this product offering, kind of similar to what I held up in my hand, custom ASIC chip right here in the middle, which is our own intellectual property. It is our system on chip that we have fabricated by a semiconductor company. And we have gotten the necessary certifications for the 3 versions, fiber, Ethernet, and cellular, that utilities are deploying in the field. To that end, since achieving certifications, 21 utilities have activated field trials and deployments of our TRUSense Gateway as a inflection point in our growth.
Fantastic. We've got a couple questions that come in. I'm going to jump on these because I think they line up with some of the questions I had here. So let's tackle some of these. Jeff asks, out of the 300 odd clients that you have, how many contribute to revenue or contributed to revenue during the last fiscal year?
All of them.
All of them. Excellent.
We do not have customer concentration. There's no utility that represents more than 5% of revenue. I think we do a decent job of disaggregating that within our MD&A section as well. But we continue to generate recurring revenue from utilities that have been longstanding customers of ours through annual technical support agreements and maintenance on software applications that have been deployed on every single device. And as we onboard new utilities and activate their systems with our devices and devices to software, software to analytics, analytics to annual services and recurring revenue, the model stays the same.
Gotcha. Now you sort of just touched on this a little bit, but your top 10 clients generate approximately how much of your revenue?
Paul, I don't have a good percentage for you on that. I sort of off the cuff, I would say top 10 customers are probably under 15% of total revenue. We have, as you know, again, $42 million US revenue company, not substantial in terms of size just yet, but in terms of revenue disaggregation and risk profile, we do not have a heavy concentration of revenue from any one customer or any group of customers.
Gotcha. This is your new gateway product, which was designed by 9 of your existing clients. You've stated that the full gateway deployment by these 9 utilities would result in approximately $150 million in revenue over a number of years. What would be the equivalent revenue if you had full deployment by all your existing clients? Is that that $350 million mark that you mentioned, or?
No, the $350 million is qualified pipeline of 40 new utilities that would be incremental to our user community. So today, the 310 utilities that we support, one of which is Pacific Gas and Electric. There are a few investor-owned utilities there through our acquisition of TRUSense Gateway, so a little bit hard to disaggregate off the top of my head. But in terms of connected devices that we have deployed today, almost 3.5 million, with about another 1 million connected devices not yet deployed within that customer base. The ratio of TRUSense Gateways to meters varies. There are some utilities that are looking at putting a TRUSense Gateway at every single meter socket. There are other utilities that are looking at putting a gateway at every pole top transformer. So that on average across Canada and the United States is about 1 per 7 to 10 homes. So that ratio would heavily dictate the aggregate. If we were to deploy the TRUSense Gateway across all 310 utilities, I'd venture to guess it's over $1 billion of opportunity for Tantalus.
Wow.
It's substantial.
Yeah, that makes sense. I mean, I saw you've got a fair bit of R&D that you continue on with right now. What other resources do you need more resources to be able to fulfill sort of your mandate over the next year or two? How much R&D spending do you have to continue to do? Does it decline? What can you tell us about that?
Yeah. So I don't know if I necessarily have a better image to answer that specific question. So let me try to chat with it, talk about it. So in the aggregate, let me go back here. We have about 300, we have over 130 employees today spread between our headquarters in Burnaby and down in the United States, where the vast majority of our customers are based today. In addition to that, we have 20 channel partners. Channel partners are sort of an external sales force. Think of it in the form of manufacturers, reps, or distributors that supplement our team. Some of those channel partners have, hundreds of employees that are tracking down utilities on our behalf. Incremental to that, we have about 65 dedicated individuals at our contract manufacturer, not on our, they don't filter through our expense as individuals. It's just our third-party contract manufacturer has 2 dedicated lines today to build our intelligent connected devices with about 65 of their employees allocated to it. So we've got a fairly robust organization beyond what's reflected in on our income statement in terms of OpEx and headcount. As I think about scaling the business and the question on R&D, we've been pretty specific on that. There are certain external expenses that we have incurred over the last 12 months, and bear with me as I kind of bring up trailing 12 months. I think it's here. Yeah, so we've invested in on a trailing 12-month basis, almost $5.5 million in R&D in the TRUSense Gateway. Of that amount, again, trailing 12 months, about $1.5 million was external certifications, prototypes, contractors, other areas of expertise that we needed to supplement. So as we think about the R&D spend, we anticipate that it will go down. We're not eliminating our own engineering team. Right? Our engineering team, in many circumstances, has been with us for extended periods of time. Right? They're focusing now on enhancements to the existing capabilities or our next areas of innovation. What will go away is those external expenses. So precisely through September 30th, about $1.5 million that has been reflected in OpEx would come out as a result of now full certifications. That's helped us get back to slightly positive adjusted EBITDA as that numbers come down. Other areas that we are going to spend now that we've got the TRUSense Gateway in hand and a fairly robust opportunity in front of us is in sales and marketing. We're not talking significant dollars. We're talking incremental few headcount, regional sales managers, business development managers, a few extra dollars in marketing to make sure that we can get in front of as many utilities as possible and educate about what the TRUSense Gateway is. So there'll be some of that $1.5 million of savings over the last 12 months reallocated or redeployed to sales and marketing. But we've been pretty specific about trying to get back to adjusted positive EBITDA. And we had a long track record of delivering positive adjusted EBITDA before this 3-year R&D project. I think investors can expect that we'll get back to that neutral to positive over the coming years.
Mm-hmm. And your cash position going forward to sort of do what you need to do, are you comfortable with the position you have, or are you looking at raising capital at any point?
Yeah, no, we do not have plans to raise capital. As of September 30th, we had over $10 million of cash USD on the balance sheet. One really, I think, attractive component to our business model is on the working capital side. While it doesn't necessarily reflect itself through metrics that some investors track, we run with positive adjusted working capital. In terms of invoicing, I think it's a point that's not necessarily fully understood by investors just yet. If you look at our DSO and our DPO, our primary vendor is our contract manufacturer. On average, we pay them about every 100 days. Our contract is 90 plus in some circumstances and 100 in other circumstances. We invoice utilities on more often than not shipment from the factory, our contract manufacturer's factory. Our traditional and sort of standard terms are 45 days. So we're invoicing and collecting cash before we are then paying out to our contract manufacturer, which is the biggest cash outflow that we have week to week and month to month. And so that difference in when we receive versus when we pay gives us, as a management team, a lot of flexibility to manage relative to the amount of cash that we've got. So, yeah, we do not have plans to raise capital. I think the company is adequately capitalized at this point to move forward. If we see incremental growth opportunities emerge, either in the form of acquisition or opportunity to really accelerate our position in the market, then maybe at some point in time it'll make sense to look at the balance sheet and further fortify it.
Mm-hmm. Very good. Thank you. Okay, another question from Jeff. He says, until recently, your clients have been strictly in the co-op group. Now you've signed up an IOU. Is there any big differences between co-ops and IOUs as far as CapEx decisions go?
Yeah, really, really valid question. Maybe I can flip here. So we have Tantalus as a standalone business focused on public power and electric cooperative utilities, its statement is very accurate. The company that we acquired, Congruitive, which we now refer to as TRUSync Grid Data Management, had longstanding relationships and customers on the investor-owned side. So Pacific Gas and Electric in San Francisco is one that we've highlighted quite often in our presentations. And so we are working to expand our presence to the larger utilities, both through TRUSync, the software that we acquired, as well as TRUSense. And so appreciate the question, Jeff. In the state of Connecticut, we landed our first opportunity with an investor-owned utility called United Illuminating. That's in our press release materials for sure, and a public docket here in the state of Connecticut where I reside and where I'm working today. That's our first investor-owned utility where we have physically sold a device, an edge computer, an edge, an intelligent connected device, excuse me. And it's the first project with an IOU for the TRUSense Gateway. Just as an aside for everybody, in the project, the investor-owned utility, United Illuminating, is focusing on three things. One of which is enhancing a legacy smart metering system that they purchased 5 or 6 years ago that doesn't meet regulatory requirements today, and they're not going to get approval to rip and replace that meter. The second primary driver is load control. So how to shift peak load during the course of a day and the course of a year. The third is power quality, particularly as it relates to storm preparation. And so this utility witnesses a lot of, or I should say, increasing extreme weather that puts stress on a very old grid, meaning aged assets, and as a result has a lot of power outages. And so power quality data helps the utility pinpoint where their grid is most susceptible to failure and outage, and then from there prioritizing their CapEx on what to upgrade. So to the specific question, I haven't forgotten, from a regulatory perspective, investor-owned utilities, unlike public power and co-ops, have to typically go through some form of regulatory review. On average, investor-owned utilities typically look at rate cases, meaning they're submitting documentation to state regulators every 3 years. And in conjunction with that, it outlines what the utility wants to prioritize in terms of R&D and CapEx. Regulators approve or disapprove, and that then leads to a rate case, meaning what rate a utility can charge its customers in the state over that period of time. So historically, within the investor-owned utility, you've got to be, as a vendor like us, mindful of where utilities fall within their 3-year rate case. As we think about entering the investor-owned space with the TRUSense Gateway and with TRUSync, we are pinpointing a number of states in the U.S. where there are regulatory drivers and dollars funded to explore new technology to address a combination of what's happening behind the meter, how to protect a pole top transformer, how to improve storm preparation and restoration from an outage, and where there are regulatory drivers around those themes and use cases, along with a sandbox, an allocation of dollars for utilities to spend without having to wait for 3 years. That's where we're pinpointing, and that's where we're focusing on our sales. So I'd say we are taking a very, this is brain surgery, right? This is a rifle shot. It is not a shotgun approach on the IOU side. We as a smaller organization, we can't afford to sit around and wait for 3 years while IOUs make decisions. So we are, I'd say, allocating our time and attention where we believe there's opportunity and dollars to be spent in the immediate term to demonstrate capability. I hope that answers the question.
I'm sure it does. Peter, how sticky are your clients? I could imagine they don't change this technology very often.
Yeah, so I'll stay on this slide. So it's very true. We're fortunate, and I'd say beyond beyond our employees and technology, right, we have a tremendous asset in our customer base. I think about how many other, if you take a step back as an investor, right, how many companies in your portfolio have a customer base that's willing to volunteer time to their vendor to help develop technology that they're going to purchase? It's a very unique dynamic that we have here at Tantalus. For those investors that have attended and the analysts that have attended our users conference and spoken to customers in person, right, it's very evident that we have a very sticky customer base. I've been a part of a number of tech companies in my career. Never have I seen customers willing to legitimately partner and work alongside our engineering team at no cost, right? Just volunteering time to help us enhance and improve. So we have utilities that date back into the early 2000 timeframe that are now over 20 plus years of a relationship. They have lived through us through generation 1 to now what we're deploying generation 3 of our technology. They have lived through previous version of what kind of was the TRUSense Gateway, the formation of it to what it is today. And so I'd say we are very fortunate to have a very sticky customer base. That's part of the reason why we like the connected devices. Once you convince a utility to put an edge computer inside the meter, to put a TRUSense Gateway at the meter socket, to put equipment inside the substation, utilities typically depreciate that equipment over a 10 to 15-year time frame. So unless you royally screw up, it is very expensive for the utility to rip and replace that infrastructure. Our goal is obviously not to screw up, is to put a device in the field and then consistently think through with over-the-air programming updates with software and firmware, much like your iPhone. How do we consistently enhance the performance of that device? How do we gather more data? How do we monetize that data to really solve problems for the utility and generate recurring revenue for our shareholders? So we're very fortunate. I don't have a specific answer as to number of years on average of our current customer base, because it kind of varies year to year based on the number of new utilities that we add. But the deployments that we are either activated or already have completed are typically in the field for at least 12 to 15 years, and we've seen a great refresh. One of the, I think, statistics we are most proud about here at Tantalus is over the last 20 years, we have a 99% retention rate of our customers. Right? They renew with us and they stay customers for a long time.
Very nice and sticky. Peter, competition, just maybe give us an idea of what the competitive landscape looks like for your products.
Sure. So we are one of the few publicly traded, pure play grid modernization companies in Canada and the United States today, both of those public markets. There are very few opportunities to invest in this thesis on a pure play basis. What I mean by that is you could look at Siemens, you could look at GE, Vernova, the spin out Vernova that they've issued. You could look at Siemens or Hubble. Right? Those are big contract manufacturing companies, metal bending companies that may focus in and have a segment of their business focused on the distribution grid. We are one of the few pure plays. And so to that end, the way we kind of discuss competition is just staying on this chart. We see competition on the smart metering side for sure. We do not manufacture meters. We build the intelligence that goes inside meters. And so to that end, we partner today with Itron, largest meter manufacturer in the United States, publicly traded on NASDAQ. Landis+Gyr, publicly traded in Switzerland. Aclara, big division of Hubble, publicly traded on the New York Stock Exchange as part of Hubble. We also compete with all three of them. Right? They have their own intelligence. They have their own software. They have their own systems that they try to sell into our customer base or the public power and electric co-op space. So within the metering side, I'd say that's where the most mature competition is. Again, because we partner and we compete with the meter manufacturers. So it's a little bit of co-opetition there. To the left-hand side, as it relates to analytics, we're really on the cutting edge of machine learning and deploying within the TruGrid automation suite transformer monitoring. some substation automation capabilities, and what we call grid reliability analytics. There are a couple of divisions within larger organizations that we'll see. There are a couple private companies, but I'd say that the competition on the analytics side in our sector is not yet fully mature. And as it relates to the TRUSense Gateway, there are really two or three companies that we're tracking. Tesla is the largest. They've developed something similar, but very different. What they've developed is what's called a collar, just to give everybody a sort of different visual here. This is our TRUSense Gateway, right? Disaggregated, and it plugs into a meter socket on the side of your home, and any existing meter can retrofit, plugs right into it. So Tesla's developed something similar. The difference, though, is they're not focused on metering. They're not focused on power quality. The only thing they're focused on is controlling the Tesla inverter for the new power walls or the charger for a Tesla vehicle. The concept is help a homeowner turn those devices into distributed resources, turn the home into a little microgrid. So that gets to the behind the meter use case for us. So it's great validation, even though they're a massive organization, obviously, with now heavy influence here in the United States. So I see we're not really competing head to head because they're focused on aggregating Tesla equipment. We're focused on helping a utility aggregate any type of EV charger, any type of inverter, any type of storage, any type of electric water heater. And so I think we're taking a much broader approach. There's a private company that's really focused on rooftop solar installation at the consumer level. They partner with some of the large solar installation companies, and that's really to control the inverter from the meter socket. So I'd say that, again, not a very mature set of competitors just yet. And I'd say what Tesla's doing is a small subset of, obviously, a lot of the commercial marketing that they do. So, going back to sort of solutions, I'd say mature competition here on the metering side, not so much yet on the substation and distribution grid analytics, and certainly not too much yet on the behind the meter control. I think we've got a real opportunity there to penetrate the market early.
Peter, I know we're short on time today, so I'm going to sort of wrap it up here with one last question. Just as investors, we're watching the business. What do you think are the most important things we should be following here, either metrics or catalysts, to really understand how you guys are progressing?
Yeah, so thanks for the question. I'd say the items that I'm most focused on, I'll answer it in that way. Are we successfully converting new utilities out of our pipeline to join our user community? Because the value of each utility increases over the life of that relationship. So how many utilities have we converted month to month, quarter to quarter, year to year? And how large is our customer base growing? The second is within our ARR, how much are we generating per device per year? And are we increasing that number? Right? Because that is by far and away high value, high margin revenue for us that helps us plan. The third is at this point with the TRUSense Gateway, how many utilities have we activated with field trials or initial deployments of the technology to validate our use cases, to validate ROI inside that organization? Because we have a great track record of, once we get into a utility, expanding that relationship over years and driving additional revenue over time. So how many, as of September, we were at 21 utilities initially deploying the TRUSense Gateway. Is that number growing? Within that number, are we making advancements from field trial to a phase 0, a phase 1, a phase 2 deployment? So those are some of the things I think, as we think about both profitable and sustainable growth. Are we expanding our customer base? Are we increasing our ARR each quarter? Are we increasing the number of utilities that are really starting to put the TRUSense Gateway into the field? And are we successfully converting some of those utilities to much larger scale and much larger deployment? There's sort of four, Paul, that we're most focused on internally right now.
Mhm. Listen, it sounds like you had a really, really busy last year, and it sounds like next year is going to continue to be an exciting one for you. So, Peter, thank you for taking the time today to join us. We've been speaking with CEO Peter Londa, Tantalus Systems Holdings, symbol GRID on the TSX. Peter, one last time, thank you, and look forward to catching up with you soon.
Paul, thanks so much for the questions. Appreciate everybody's time and interest. Have a great day.
You bet. Bye for
Bye-bye.
now.